The economy added 295,000 jobs in February, and the unemployment rate hit its lowest level in 7 years, 5.5%. But a closer look at today's jobs report shows that the economy isn't as strong as the administration would like you to believe. With more on this, Diana Furtchtgott-Roth, a former chief economist for the Labor Department. Diana, welcome back to the show. So these numbers, super interesting, and I know the administration is jumping up and down about this, but look, I talk to people all the time. I don't see the enthusiasm among people out there looking for work as I do when I listen to what the White House is saying. Why the disconnect?
It's because one reason the unemployment rate is so low is because a lot of people have dropped out of the labor force. The last time the unemployment rate was at 5.5%. That was around May 2008. The labor force participation rate was a couple of percentage points higher. And if we had the same labor force participation rate now, there'd be another 8 million people in the workforce.
And about another
7.7 million people employed. So that's why people don't feel so comfortable.
Oh, that's a great explanation. So the world has changed. Fewer people are even looking for work.
Exactly.
And the labor market is totally different. The other thing that's different, and I think significant, are wages. You know, we saw a bump up here, about 3 cents an hour, a 2% increase year over year. I think the number's $24.78 an hour. Right. But is this enough?
Well, what's important isn't so much the wage, but upward mobility. Can you get from that low-paying job to a higher-paying job? Because, okay, you're not going to stay at that job forever. Even you, Gerri, you're going to move to a higher-paying job. And the problem is that job openings, there aren't so many job openings. There aren't so many opportunities to move. And that's another reason people don't feel so confident. They can't see their path ahead to the next job.
I think wage growth is an issue in this economy, and the fact that people feel like the increases I'm getting are so small that I'm not even keeping up with inflation. Isn't that an issue?
It's somewhat of an issue, but right now inflation is actually negative. The producer price index, the CPI, is down 0.1% over the past year. I think people are really uncomfortable, not just because of the wage increases in their job, but because they find it harder to move to another job. We're having problems with job mobility, with upward mobility, and that needs to be fixed.
You can't find that next job that will pay you more. You are stuck.
Exactly. And
You're stuck and you can't go anywhere.
Exactly. And the government is doing so much to stop people working. I mean, President Obama might be celebrating today, but if he would only approve Keystone XL pipeline, if he wouldn't be so adamant about raising the minimum wage, there's so many things he's doing.
Topics for another day. I want to stick with what we're looking at here today. And what was so confounding to me, great news for the jobs market, presumably at least at a superficial level, and stocks sell off. The Dow plunges. What are traders thinking here?
They're thinking that now the Fed has to raise interest rates because Chairman Yellen has been saying for months and months, well, the labor markets aren't tight enough. But now we can just see the unemployment rate is 5.5%. And these people who are sitting out on the sidelines, they're not going to be coming in. In fact, the labor force participation rate fell again a 1/10 of a percentage point today. So that means the Fed's going to have to raise rates. What does that mean? People are going to be moving out of the stock market into other assets. That's why the stock market falls when there's good news.
One other thing I want to get to here. Jack Lew telling Congress today that we're going to hit the debt limit next week, or I'm sorry, March 16th. You know, how weird is this? So we're going to hit the debt limit. The president is talking about raising taxes by administrative fiat. And tax collections, my friend, they're at an all-time high. We got more taxes than ever. Why do we need to raise taxes? And why are we hitting our heads up against this debt limit? None of it makes sense.
Well, what we need to be doing is cutting spending, and there's plenty of things we could be doing. Congress, the House just passed a bill to increase subsidies for Amtrak, for example. That's something we could be cutting back on. But it's more important just to increase the GDP growth rate, because that way we get more tax revenues without increasing tax rates. That's what we need to be aiming at. How do we get from we're stuck at about 2.4%.
Starving the beast is no way to grow the economy. Diana, thanks for coming on tonight. Very good to see you.
Great to be with you.